Target earnings just crossing the tape. Courtney Reagan is here with the numbers. Court.
Yeah, Melissa, so let's get through this. There's a lot here. Target's second quarter earnings coming in at $1.80 per share. That's 41 cents above consensus, but the profit was not driven by sales. Revenue at $24.77 billion, below $25.16 billion estimated. Also slashing full-year earnings guidance. This even after this quarter's huge beat. So it's now expecting between $7 and $8. That's down from $7.75 to $8.75. It's also bringing down its sales expectations to mid-single-digit declines rather than low single-digit decline to low single-digit increase. Target's comparable sales down 5.4%. That is well below estimates for a 3.7% drop, also the first decrease since 2016. The retailer says discretionary categories again weak, while food, beverage, essentials, beauty, those frequency categories, those were stronger. Digital sales down 10.5%. That's the third straight quarter of declines and the worst performance since Target has been giving this number. Inventory fell 17%, and lower markdowns did help to lift gross margins. Operating margins also better than expected, but at 4.8%. That's about half of the level where it was 2 years ago at 9.8%. On a call with media, Target CEO Brian Cornell pointed to macro pressures, including inflation, for tempering sales, but also, quote, negative guest reaction to our Pride collection. He also continued to say negative reaction to our Pride assortment and added, after adjusting mid-quarter to address safety concerns, the business recovered steadily in July. I asked Cornell to clarify that the response by some consumers to the Pride merchandise was material enough that it impacted sales, but then after Target removed some of the merchandise or moved it in some stores, the trends changed. He said, quote, you describe it very accurately. We only took actions in the month of June. We wanted to make sure we're focused on the safety of our teams and the safety of our guests. Once we took those actions and addressed the situation, we certainly saw things normalize. Now, the last time Target's comp sales were negative, as I mentioned, was 6 years ago, and that does correspond to the 4 quarters that followed the retailer's stance allowing guests to use whatever bathroom they choose for their gender identity. Though Target did say at the time that any lost sales from those boycotts weren't material enough to report. This time, though, they're calling it out, just not quantifying it. It's just, again, seemingly caught in the middle of these culture wars in a way that did seem to impact sales.
In the crime, the gangs.
So right. So we asked about the shrinkage in the release. There's only 3 words basically addressing that directly, and they said it was as forecast. So when they gave it to us last quarter, they said it was on plan from where it was, but that it has doubled in general, the loss from shrink, since 2019. So that is still on par from where it was, but it hasn't changed.
It's not a non-material number.
Right. And Target is the only retailer that, in my history of covering retail in 12 years, that has ever quantified shrink when they gave us that number. Yeah. They gave it to us 2 times, in November and then again last quarter.
Look at the stock. Closed at a low, but closed at 52.
Yeah, and I have to say, this stock reaction is surprising to me, mainly because of that guidance, to take down that guidance so far, especially after beating on profit. But there's a lot in this report.
I mean, it's down 20% in the past 3 months.
Exactly. Right. In stark contrast to Walmart, which is up 5% in 3 months.
The comparison chart is like mind-boggling.
It really is. It really is, and we often put these two together. But
in big market cap, I mean, we're talking about billions of dollars.
Billions of dollars to see that spread differ. Yeah.